Hey, everybody. Today I got with me Alyssa Scott from United Credit Advisors. You are going to want to listen, all right? Credit score, very important thing out there. It affects everything in your life. People act like, well, I just pay cash. I don't need a credit score. Okay, you do need a credit score. And Alyssa's going to go over some tips on how to improve that score. Credit score affects you everything: mortgage rates, car loan, rentals, insurances, you name it, credit cards, right? Bad. So Alyssa's going to go over some stuff. So Alyssa, are you ready to go?
I'm ready, my friend.
I'm handing it off to you. Run the show.
All right. Awesome. Thank you. Thank you for the intro. So my name's Alyssa. Like Tim had said, I'm with United Credit Advisors. I've been in the credit industry for nearly 10 years. I've seen it all. I'm very familiar with it all. And I think it's very important to get the word out of what's credit, what affects your credit, how it can be beneficial, and what solutions are out there for you as a consumer to be able to have better credit and maximize on lower interest rates, lower monthly payments on anything that you're trying to do, like Tim alluded to. So we'll dive right into it. So there's a lot of different credit repair companies out there that really will dispute a bunch of things for you on a credit report, and say that it's working and saying that it's helping your credit, and usually it's not. I'm sure you've tried to dispute things yourselves as consumers and haven't really seen any results. So I put this slide up here because it's important to see the various negative things that can be on a credit report. So you've got public records such as bankruptcies, tax liens, account history, which is the big section, collections, charge-offs, late payments, medical bills, inquiries, foreclosures, identity theft, divorce issues. All these things are negative things that can be on a credit report that can impact your ability to borrow and your interest rates that you're paying on the items that you're buying. So the vast majority of credit repair companies, they just dispute negative items such as what you can do yourself. Usually doesn't work. So our process is completely different. Our process is a two-part process. We work first to remove the negative items, second to help you with positive credit. So the negative items, we remove the errors. That's the easy part. Second part is we're upholding various laws that are put in place to protect consumers to the very highest degree. The main one, of course, being the Fair Credit Reporting Act, which in thousands of pages basically states every consumer does have the right to 100% complete and 100% accurate information on their credit reports. So with our investigations, we're going to demand very specific and very detailed information regarding all of your negative items. That includes, late payment history, licensing information of collection agencies, transaction history, dates and times. There's over 1,000 things. If these creditors and the bureaus cannot provide that information, or within the time frame that they have under the federal law, which is 30 days, then they are in violation of these laws. We put them in violation of these laws, and it has to be deleted no matter what it is. So from there, we'll reinvestigate as needed until we can achieve the deletions for you. Every deletion immediately increases your credit scores. So the second part of the program is this. This is essentially a FICO score calculation. It's how your scores are calculated and everything that goes into it. I could talk about this for days. I won't do that to you guys, but here's a couple brief examples of how these things are impacted. So you'll see that 35%, that's the largest section. That's where all the negative information is calculated. This is your late payments. This is your collections. All of that's calculated there. But you'll see that 35% of an overall FICO score has nothing to do with negative information. This is what's called positive credit, or the variables in your control as a consumer. So to maximize on these points, debts owed, that's the second largest section, that's 30%. This is your open and active revolving accounts specifically. This is credit cards. I know a lot of people don't like them, we don't want them, or you can't get approved for them, but they are a valuable asset when it comes to credit. The key here is proper utilization. So ideally, you want to maintain a 10 to 30% utilization balance of your overall limit for each open and active credit card. That gives you the most positive points. It is not ideal to go open 10 credit cards. It's not ideal to max them all out. Keeping a few credit cards open and active, keeping a small balance is what's going to give you the most points. Length of credit history moving down, that's 15%. So that's how long you've had your accounts. The way this is calculated is they take an average of your open and active accounts, your longest standing to your shortest. The longer account history that you have, the better, the more points that you'll get in this section. So opening and closing accounts often doesn't help. Keeping one good standing account open as long as you can is going to be very beneficial for you here. As we know, and the oldest trick in the book is you can always become an authorized user on mom and dad's credit card, or say grandma and grandpa's credit card. You inherit that account history from the day that account was opened, and that will come on your credit report. So you can maximize from, family being very kind and wanting to allow their trade line on your credit report.
And that will help your score, right?
Correct. Yep. You can see a boost in scores anywhere from 50 to 100 points, depending on their account history with that particular account for credit cards. Yep. And then types of credit, this is your revolving accounts and your installment accounts. Revolving being credit cards and HELOCs, installments being mortgages, auto loans, things like that. They look for an ideal profile. And what I mean by that is they look for a 1-to-1 ratio of these accounts. So it's most ideal to have one installment to one revolving. Like I was saying before, it's not beneficial to have 20 credit cards to 2 installment accounts. Keeping them 1-to-1 is going to give you the maximum points in this section. And then new credit. So this is the only section everyone's given points to take away from. Everyone's given about 65 points in this section to shop around for credit. These are your hard pull inquiries. Now, a hard pull inquiry is when a lender pulls your credit. A soft pull inquiry is when you pull your credit yourself. Lenders can also do soft pulls, but they don't affect your scores, but that's the difference between a hard and a soft. A hard pull inquiry can deduct anywhere from 2 to 5 points per bureau per inquiry when a lender pulls your credit. So keep that in mind when you go to an auto dealership and they say they're going to look for the best rate for you. They will shop you out to several different banks. You will see all those inquiries on your credit reports, and it can drop some scores.
Can we pause? Can we hold on there for a second? I want to ask you something on that. So I have my credit pulled today. I'm applying for a mortgage. On average, each bureau will drop 2 to 5 points.
Correct.
Now, for the consumers, does that 2 to 5 points show up on the score that the mortgage company is going to see, or is it the next time it gets pulled?
Nope. So that will immediately be deducted from the report that you're pulling. So if you pull my credit right now, we'll see that 15 to 20 point drop right away.
Right. 15 to 20?
Well, I mean, 6 to 15 roughly, because it's 2 to 5 points per bureau. So it'd be anywhere from 5 to 20 points total that would be dropped.
Oh, but like I'm talking about, so Experian drops 5 points, Equifax 3.
Yes,
not 20 total. You added them all up.
Yeah, right. Not total collectively on all the scores.
Out right there.
No, not collectively on all the scores. 5.
So just one more thing though. So like if I apply today for a mortgage and then I apply tomorrow at another mortgage company, is there a certain window I have?
Yep. So that's a great question. It's called shopping windows time frame. So you do have a time frame per each industry to shop around and have your credit pulled as many times as you want for, obviously the best rate, whatever you're looking to do. In the mortgage industry, it's about 10 days. So every algorithm that's used to calculate a credit score, and perhaps Tim and I will talk about that on another one, has a different shopping windows time frame. And so there's anywhere from 10 days up to 45 days that you can shop around for credit, but it's depending on which algorithm is being used to calculate the credit score. So for the safety of your points, I'd say try to do it within a 10-day time frame.
Okay.
Yep. Any other questions on credit scores and how to calculate them that you can think of, Tim?
I mean, just the one thing I see a lot of is when I see people with high debt versus their limits on credit cards. I've faced it a couple times a year, but it's always, well, I carry these large debts because I want the credit bureaus to know that I can pay these large balances and handle the debt. And it's like, no, it's the opposite. Like, they look at you like you're one broken leg away from a bankruptcy, one missing paycheck away, so carrying large balances is not beneficial to you. Would you agree?
Correct. 100%. Smaller balances is ideal. And so that section of your credit score is graded on a chart like this, if you will. Okay. So as your point, so down here, if you're at this 0 utilization, you're not getting as many points because it looks unutilized. Mm-hmm. In this particular section, you're getting the most points because you're properly utilizing the credit card from a 10 to 30%. The higher your limit gets, the more points it's going to be deducted. So you are 100% correct. If you keep a small balance, it shows that you can reasonably and properly manage debt.
So another question is, what if I use my card and pay it off every month?
Yep. So that can help, but it depends when the creditor reports to the bureau. So if you have a Capital One credit card and it reports to the bureau the 15th of every month and you're paying it off the 10th of every month, well, every month it's reporting at a 0 balance. So to the bureaus, it looks unutilized. So even though you're paying it off and using it and paying it off, what matters is what the bureaus are seeing each month when the creditor reports to the bureaus. So keep that in mind with your statement dates and your payoff dates. Maintaining a small balance is most ideal as opposed to using and paying it off.
Okay. Got it.
Great questions, great points. So as a part of the program too, we do offer a online portal, which is available to our affiliates as well as the clients. It is bank level security, and this gives you full access to progress in the program. So you know where you stand all across the timeline and within your enrollment in the program, excuse me. And then the pricing. So typically it's $130 enrollment fee to start in our program, but because Tim would refer you, you do get a $100 discount, making it only $30 to start. That's the enrollment fee. That comes with your online portal access, your credit education, your team of credit advisors, launches your investigations. And then from there, we only bill after the month of work has been completed for you. And it's $99 a month thereafter. Month to month, there is no contract. Conservatively, we average about 15 to 30 points of an increase on credit scores per month. So clients are in the program with us anywhere from 3 months to 8 months. It just kind of depends because no two credit reports are the same.
Yeah, and pretty neat. I see there, no contracts, cancel anytime. We see all the time where I've heard people before in these credit repairers, they're like, well, what's the benefit of a credit repair company getting my credit repaired and then I'll stop paying them? They'll lose it. It's basically like, hey, why would, the pharmaceutical industry make you healthy when you're healthy, they lose a customer.
Yeah.
So what do you say to that for consumers maybe watching this thinking like, well, how do I know you're not going to drag me along, or why wouldn't you?
Yeah, great question. So the business here, we're 100% referral based. We don't do any marketing, we don't do any advertising, and we strictly work with mortgage lenders because their clients have a goal, and that goal is to get approved for a mortgage. At the end of the day, if I keep their clients in the program longer than necessary, that's an affiliate that I'm going to lose. And that's essentially a pipeline that's a business referral partner, right?
Yeah.
So we wouldn't be in business very long if that's how we operated. So your goal is to get a mortgage. Our goal is to keep everybody happy and keep our affiliate partners happy and referring. And then at the end of the day, everybody wins.
What if someone just saw this in general on, YouTube or something, they just want to fix their credit, they already own a home, maybe went through a divorce or something, you'll work with them too, right?
Yeah, we take anybody. I mean, if you're seeing this somewhere and if you're referred by somebody, or obviously Tim's recording this and going to blast it out to the interwebs, that's anybody we can help. We try to reach as many people as we can. We understand credit is a tough thing to talk about and face, and a lot of people don't want to talk about it. They're embarrassed. They just don't understand what it takes to fix credit. We want to help anybody and everybody. I mean, we also have a referral program. So if someone enrolls and they refer their friends, family members, everyone that they refer that enrolls, they get 10% off. So you send 9 people over, you're getting free service.
Gotcha. So, great job. And do you have another slide with your contact info so people can? Oh, cool. What's this? What is it? Are you surprising me right now? What do we got?
Surprise. So any questions or answers, this is just us, but for contact info, I don't have a slide, but I can definitely send you something that we can put at the end of it.
We'll put your contact info in the description. Do you want to, and if you don't mind giving them a number they can call. But before you do, I just want to make sure if you made it this far and your credit is bad, Alyssa mentioned it, don't be ashamed by it. Okay. That credit is not going to fix itself. Okay. We get so many times where people are like, I'm just going to wait, it's going to drop off in, 2 more years or whatever, right? Like, get proactive with this part of your life, get involved with it, get engaged. There are solutions, and just, you got to start, right? You got to start repairing this part of your life, because it's going to be an anchor on you financially if you do not jump in and start fixing this part of your life. So, Alyssa, excuse me, how do I get in touch with you?
Yep. So the best way is to call our office. The office phone number is 720-621-1716. Again, we're United Credit Advisors, or you can always send an email. The email is info@ucacredit.com. So that's info@ucacredit.com.
Good deal. Well, I appreciate being with us today. And you guys out there, if you are looking to repair your credit, or maybe she's already repaired it. Now you're looking to buy a home. We are licensed in a lot of different states. We are happy to help you get pre-approved. Florida, Georgia, Virginia, Pennsylvania, the Carolinas, Tennessee, Indiana, Michigan. We're all over the place. All right. If you want to get pre-approved for a mortgage, we are happy to help. And please, if you are concerned about your credit, you want to work on it, reach out to Alyssa. as of right now, recording this in March of 2023, she's on our good list, right? So you're doing a good job so far. So there we go. And I like your thoughts on why it's important for you to continue to do good, because we are referral based as well. You know, we don't take care of our realtors, buyers, they just stop sending us deals, right? So
Yeah.
same format. All right. Listen, you good?
100%. Yeah, all good. Thank you for your time today.
No problem. Be on the lookout for some more videos. We'll do some more stuff with Alyssa about credit. And if you want us to talk about something as well, put it in the comments. Let us know. All right, guys. Take care, everybody, and let us know when you help. See ya. Thanks, Alyssa.
Yeah, thank you.
All right. Good job.